All right, ladies and gentlemen, we now move on to the first session of the day, the topic for which is India at the heart of global remittances, $125 billion and beyond. Please allow me to welcome on stage our esteemed panelists with a huge round of applause. Can we please put our hands together for Mr. Srikrishna Narsimhan, Chief Executive Officer and Executive Director, Wsfx Global Payment. Can we also welcome Mr. Dewang Neralla, founder and CEO, Hiwipay. Can we please put our hands together for Ms. Rupa Mankad, Managing Director, Asia South Head of Liquidity, Citi? She's not here? All right. Mr. Kanchan Kumar, CEO, Truly Financial. And this session is going to be moderated by Mr. Partha Sinha, Regional Compliance Head, APAC WISE. Now I hand over the further proceedings of this session to our moderator. Mr. Sinha, over to you.
Thank you. Thank you. This is an interesting session for all of us. India has been close to all of us, whether some of us are NRI, some of us are residents in the country. So 125 billion is not a number, but it's a value that gets created, and it's a big number for all of us in the country and the foreign diaspora. It's not only sends money, but it adds to the ecosystem, and it adds to the GDP and multiplier effect. So today we are going to discuss in terms of how we can add value to the ecosystem and create these remittances from 125 billion is not only remittances, how can it add to the ecosystem and to the liveliness of our residents here. I would request my panelists to briefly introduce themselves and tell about their journey and life story a bit, and then we can dive into that. Kanchan.
Hi, my name is Kanchan Kumar. I'm founder and CEO of Truly Financial. We are a global banking and payments infrastructure company. We issue bank accounts globally. The reason why I'm here is not to talk about my company, but given my background, I have run Remittance company. We were the first one to launch digital remittance app in Dubai for blue-collar workers way back in 2015. I run the remittance infrastructure, payments infrastructure, so I understand that part. But more importantly, I'm also an NRI. So I'm someone who sees remittance on the other side, how it looks, how it feels, what is broken, and how we could possibly fix it. And that's why I'm possibly here.
Okay, thanks, Partha. I'm Dewang Neralla, founder and CEO of Hiwipay. We are a cross-border payments company focusing on students, outward transfers, as well as on businesses for SMEs to help them collect monies as well as remit their monies outside the country. Personally, I have been in tech for a long period of time, built financial market infrastructure for my first company, Financial Technologies, where we owned, I was the founder of that company. So we owned and managed exchanges, including foreign exchange platform, one of the India's first interbank foreign exchange platform called IBS Forex. That was in 2001. Subsequent to that, I've looked around managing, looking at, we created a domestic payments company called Atom, which I drove basically again. So and now we're creating Hiwipay. The idea is basically using tech to create and make that impact to the last mile is what I have focused on. And that's where I think I can see where I can add value there. Thank you.
Hi, this is Srikrishna. I'm CEO of Global Pay. I have around 29 years experience in foreign exchange field. Today we handle outward remittances in a big way. Wall Street in its early avatar was a large inward remittance player. We used to handle the cash-to-cash part of the business. We are a principal agent of Western Union. Currently, we are into cross-border payments, more focused on outward remittances, but where I feel I can give a perspective from the outward remittance space, we are also into issuance of prepaid Forex cards. Very happy to be here in this panel. Thanks.
Thank you.
And maybe you should introduce yourself as well.
Yeah, briefly about me. So I'm Partha. I have been in this cross-border and payment space for more than a decade, and I lead the compliance function for Southeast Asia and South Asia, and also support the India business in my capacity of a director on the board. So yeah, that's about me. Thank you. Wise, of course. That's the important part, right? Yeah. Okay, so I think we can start off with the bigger picture, right? So the foreign Indian diaspora is not only the numbers 125 billion, but it's the largest in the world, right? So what do you think in terms of, and this is to you, Kanchan, right? You have been there as an NRI in your experiences, right? What is essentially can add value to the ecosystem, and what are the changes that are coming? Can you just briefly pick up on this?
Sure. I think before I answer that, I'll take one step back and give some context to where we are today and where we have come in, right? Remittances started out as a cash remittance, the typical Western Union model, which is famous. You go to a counter, you give cash, the cash gets delivered here. I call that, remittance 1.0. 2.0 is when players like Wise came in, built digital remittance experiences, which allows money to move in electronically using banking rails in both the countries, right? And that has been a huge change, and that's one of the drivers which has reduced the cost, and a lot of credit goes to Wise and the likes of Wise, reduce the cost and ensure that more money flows in, and not just more money flows in, but more money flows in the pockets of the recipients, because the cost of cash transfer were high. And now, the way I visualize is that we have to go beyond this, and I call that Remittance 3.0, where we have to combine the experiences. So remittance is not just sending money for family maintenance, right? When you live outside of India and your part of the life is based here in India, your parents are here, your extended family is here, you have a property here, your life is interconnected. But remittance today does not touch any of that. You send money to a bank account, and that's end of one transaction, and then rest of the transactions start from there, right? If you have to manage your NRO, NRE account, that's a separate process. If you have to make investment, try opening a PIS account as an NRI, it's a nightmare. The papers have to be couriered in, out, all of that, right? Try signing up for a new health insurance as an NRI, see the documentation which is required for you to do that, right? Try making a premium payment on behalf of your parents, see the questions which are being asked. Now, all of these cannot just be fixed by just improving payment rails. It requires a much more holistic outlook, and I think that is what will create a much larger value for the country going forward. And that's how I see 125 billion going to $300 billion in 5 years time frame.
Whoa, that's interesting. $300 billion in 5 years. Interesting point. And I think a very good point being brought out by you is how we can integrate the remittances to adding value to the customers. And I mean, we see a lot of players are coming up in the last 6 to 9 months, and also like GIFT City has also enabled some of these things to try and experiment on these elements. So I think, as you rightly said, inward is the key. But so Krishna, from your experiences, because you are right now managing the outward side of it, how do you think this adds value, or the ecosystem is working, right? Because today the way we see it, remittance is only inwards and outward, but is there a play around that?
Yeah, definitely. One interesting perspective I can give you, it all starts with outward remittance, right? Indians go out, and that's how the diaspora gets created. So it's not about money going out. It is an investment which is going out, and inward remittance is return on investment. That's how I'd like to say that. So if you see, there is a correlation of 1:4 to 5 times. So outward remittance grew in the last 10 years. If you take the statistics, correspondingly, inward remittances grew also into 4 to 5 times. And that is an interesting statistics in the last, except for the last 2 years where students' remittance has been stagnant, you could have seen a growth of student remittances which nearly doubled over an 8 years period. And we also saw outward remittances grow. What essentially is happening is, one more perspective I'd like to give you is, more and more students have traveled to US, UK, Canada, And we have seen that inward remittances from advanced economies have become higher than the traditional markets like Middle East. That's also an interesting perspective. So there is a sharp correlation between outward and inward. And from an inward perspective, obviously, a lot of players are there trying to solve multiple problems. Even in the outward journey, we are trying to solve problems. So what I look forward to is, the value of a customer is for a lifetime. When an Indian goes overseas, the first 2 years is what he needs outward remittance services. Rest of his life, he needs inward remittance services. So a kind of there is a requirement that, the biggest challenge has been always compliance about customer onboarding, about his identity. If we solve that problem and have a platform which provides him both the facility for inward and outward, that will be a game changer. Thank you.
Sure, thank you. I think key point from your side is technology enhancement to try and pick up how we can improvise on the KYC side or the onboarding journey, and the lifetime value, because because if somebody comes in to your platform, then they go out, then they send money, but the experience sometimes gets broken. I think as an NRI, can you speak about it, Kanchan, a bit?
Yeah, again, the very valid point that he mentioned, that the inward remittance journey starts from outward remittance. There would have been no inward remittances, people did not go out, and no one goes out empty pocket. They have to take money with them. But when you take money out, the friction of sending money out, I would say it has reduced significantly over a period of time, but a lot could be done about it. The LRS over a period of time, has been simplified to a great degree. Now you can go to a bank, you could go to people like Srikrishna and send money out, which is much easier than what used to be earlier. But the reason for that really is about our country as a confidence has grown, right? Because you earlier saw an insecure country which thought it's a flight of capital. Money going out is a flight of capital, and you wanted to protect that, right? And I can understand completely why, because our GDP was not that strong, right? Today, the position that we are in, we could possibly afford to liberalize that even more, because like you mentioned, every time the money goes out, it possibly comes back 4x, right? So we have to see the money going out as an investment and not as a flight of capital. And I think that reflects in our policy choices that we make.
Yeah, thank you. Getting back to you, Dewang, so you have built technologies and infrastructure for decades now, right? So can you tell about your experiences and how technology has helped us over a period of time, and what is the future outlook of technology in this space?
I think if you look at the points which have been raised by both Kanchan as well as Srikrishna, I think over a period of life cycle of, forget international, even if you look at domestic, but let's start with domestic. We've started on a world of zip-zap payments. If you've seen the earlier days of payments where even the online payments were kind of thought as something which was very risky to do. People are still on zip-zap, and from then on to now, what we've evolved to. So on domestically, well, we have moved on to something like a UPI, which is basically real-time out there. Again, we've seen a lot more changes happening on the foreign or global payment rails out there. Fundamentally, shifts happening through basically money movement itself, because there was a time when we were talking about money reaching, or if you're sending money outside the country, it would take about 4 or 5 days to get the money out. Getting money into the country would take about 2 or 3 days. Now we moved from that age to reducing that time. We have not made it real time. So that is a fundamental, yes, there has been a shift out there. So there are two sides to the whole thing. One is a policy side, and second is a technology side of the picture out there. The policy side, of course, the regulators are going to be fairly strict in terms of any flight of capital going on, because inward money coming inside the country is still better. Whereas, of course, you need to do those necessary checks out there. Whereas money going outside the country, there are a lot more checks to be required out there. Having said this, basically, what we need to move towards right now, so because we have been on, even on Hiwipay, we're doing basically student remittances, we're doing inwards also. So especially the friction is highest on anything to do with outward remittances versus inward. Because inward, the regulators are fairly okay, money coming into the country, the idea is good, is money is coming inside, but money going out, there are a lot more checks and balances. What we'll need to look at typically out there is, can there be a DPI stack created for outward remittances or any kind of inward remittances. Also, if you need to do, let's say, KYC, or you want to do any kind of checks and balances out there, including your Wsfx or other checklists which you need to manage. For example, as a simple thing like maybe even an LRS. Today, let's say someone like a regulator is RBI sitting on a hordes of data. They have data of the LRS of all the constituents pan-wise right now. Can that be made through an API linkage out there? Can an API be exposed and given to practically every player around the industry? Because now you've seen just a few weeks back, RBI liberalized for non-licensed players also. You can write on top of basically licensed players and basically create tech and create innovation around that. And can that API stack be used to do your verifications out there, whether it is KPI. So KPI is your DPI you can use to do your basic KYC checks and balances, but over and above that, can you use the LRS checks and other things, especially when you're transferring the money outside the country. On the second side, for going forward again, is when you talk about, again, real-time linkages out there, the issue out here, especially when you're sending money outside the country, is do you know that the money is actually being received by the intended beneficiary? There are very few banks who give you that confirmation. You actually, as a customer, when you send money out, you have to wait for the TT copy to come to you. Maybe practically, I'm not talking about Wise example, because Wise, you're trying to do a lot more things real time. But on a traditional Swift channel, basically they get the TT copy. You do a transaction in the morning, you get a TT copy in the evening. For 5 hours, there's a stress build up. Because imagine a state of a parent or somebody else transferring tuition fees. And as usual, parents, right? We do everything at the last minute. And then the last day, not even the last minute, right? So in that case, basically the pressure builds up, the fees have reached the college, not reached the college, they keep on checking with the college, that friction builds up. If there is a way of basically getting those confirmations on real time, why can't those confirmations come on real time? Even if when you're putting the money on Swift, are you trying to batch out the transactions? How are you trying to do the transactions? So that I think a lot more things can be done on money movement. We've seen a lot more things happening globally. Of course, we have seen our finance minister talk about stablecoins also and adoption of stablecoins. We've seen globally people moving towards different technologies out there for money movement. But can that be moved onto even the current rails? We don't need to talk about basically digital currencies or anything else. Can we use existing rails to basically speed up, make sure that wherever the friction points come in, whether it's in KYC, whether it is on getting the real-time status updates, those can be given real-time. And that's the key things which we need to focus on, I think, from a tech side.
Sure. I think interesting point made by you, right? So I think there is enough efficiency and opportunity in the current ecosystem to also like leverage and not only rely on like probably technologies that are coming up, tokenization elements like that. So yeah, I mean, I think, thank you mentioned about Wise, right? We do a lot of this real-time confirmation because we have built a network of licenses and we can do that. And Wise also like offers this product to as a platform service overall. Having said that, like, because this is technology enablement, so from a friction point of view, I see that the real-time thing will solve a lot of this anxiety solution. Krishna, you also have like, partnerships, and you are like pretty strong on the partnership side, and as you build outward product from India. So how do you see a play between partnership, between banks, fintechs, and the regulators going forward, which can help us build this capability? Because for sure, there's a clear linkages to the value that India gets back if the outbound remittances grow. So would you like to share your thoughts on this? Yeah.
When I look at partnerships as such, of course, Global Pay has thrived on partnerships. We are a Forex Fintech, and our B2B partnership is greater than our D2C foray. So I look at this relationship as a kind of a triad. So there is banks which bring in trust. There is Fintech which brings in innovation, solves a problem. And then there is a regulator who brings in balance. So all the three are required, because at the end of the day, it's the customer funds which is important. So there is a safeguard which is required. Innovation with responsibility is required. And in Indian context, always bank plays a major role. And that is the trust factor which comes in. So all the three ecosystem players have to play a role to bring a solution, correct? Wherein we solve the problems in terms of, finally, it's a very simple thing. It's about customer onboarding and transaction processing. I look at it this way. Whatever we talk about, it's only two things. Can I onboard the customer very fast? Can I do the transactions very fast? And how do I do it at a low cost? These three solutions are important. Luckily for us, now digital onboarding has come in. But what has not come in is a kind of a unification of the digital identity. While there is a digital KYC, which ensures that through a simple video KYC, even transactions now everything is there. But what is happening is I cannot use your KYC, and that's a big friction for us, right? Second part is obviously the cost. Too many intermediaries increase the cost. Correct? So how do we solve all these problems? So it's about collaboration. Understanding each other's problem, collaborating. The fintech partner collaborates with the bank. The regulator has got sandboxes. We demonstrate and create a solution where we solve the customer problems of transferring money fast, frictionless, and in a most efficient manner at a low cost. Thanks.
Thank you. Kanchan, you run licensed business in the US, in the Canada, and mostly in the Northam side. And I'm sure there are experiences in terms of solving for customers' problem, and also there are some things which is missing in terms of the value proposition that we create from a product point of view for remittances. What do you think that we can do better in terms of creating a better ecosystem for Indians to bring more money? Because I'm sure if 125 billion is the remittance right now, a lot of Indians are also putting money outside the country because of multiple reasons.
Very interesting point, right? The value is created, and Srikrishna made a very important point, and Dewang as well. So I'll just touch upon that and then weave into this. Remittance is a complex business. Most people see that, okay, I pressed a button, money went out from my bank account, and the money landed here. But there are multiple things which go on. There are two critical factors which are typically not in control of the remittance company: the first leg and the last leg. That is controlled by your environment of the country. So if you are in a country where the first leg, where I pull money from the sender's bank account, is real time, I have confirmation of funds, and now I could go and settle the funds on the other side. That requires that the other side also has to be real time, right? There are two kinds of use cases which typically come in. One is people need money for expenses, and then you need money for other things. Money that you needed for other things usually are higher value. You want to possibly buy a house, you want to invest in stock market, you want to, pay a, whatever health insurance premium, which is whatever, 50, 70, 80,000 rupees. These are higher value. They could be lower frequency payments, right? And these need different treatments. But the fact is, from a customer's perspective, you don't expect them to do three things at three different ways, which is how it is happening right now. If we have to create a bigger value, we have to create all of this and combine this. So we cannot see remittance as one vertical, insurance as another vertical, investment as another vertical. Because you're talking to the exact same customer. The way money is going to move is exactly the same. The purpose why the money moves is different. And that's the reason why there are people who sit outside of India who possibly have money to invest, but they shy away simply because there's too much friction to do that. The simple example, try as an NRI open a PIS account, investment account with a bank. There's no digital process to do that. Someone has to send this thick paper by courier to you. You have to go through everything. You have to be on a call with the person who sent it to you, your relationship manager, because if you missed out 1 out of 101 signature, the whole thing will have to be repeated all over again. And I'm sure you would have filled the forms which banks sent you. It's very easy to figure out where to sign, right? It's not. And that's where the challenge happens. So what do? You simply say, forget it. I will rather go to Robinhood and invest in US stock. Why couldn't I simply sign up with Zerodha and invest stock? No, because NRI, you cannot do that. You have to first, send money to your NRO account, and then you go and sign up with Zerodha, so it's a 3-step process. You don't want to do that, right? So if we want to see this value go up, we have to make it a lot less painful for them and a lot more integrated. Just imagine onboarding yourself for sending a payment, you do a KYC, your NRO, NRE account, KYC, PIS account, DMAT account, a separate KYC that you need to do. And they are not the same. The documents asked are going to be slightly different, but the same.
Yeah, but Kanchan, how does, your experience, you have been traveling also, like, how does other countries solve for it? Can you share some experience?
Yeah, so I think the difference comes between the high trust and low trust economies. We are a low trust economy. We fundamentally believe that the person who is signing up could be using it for a nefarious purpose, and hence we take extra care. And I understand we have a history of it. As Indians, we do a lot of things which we are not supposed to be doing, and which is what creates this low trust. So it has not happened out of thin air, right? There's a reason why it is there. But as we evolve as a society, we also have to evolve over the trust layer, right? And which is why, if you look at it, wherever, if you go to Singapore and you're a resident of Singapore, you have a Singapore bank account, no one really gives you a question whether you're signing up with a US entity to make an investment in a US entity, or you sign up with, wherever you send money for whatever you really do. Singapore economy still grows, right? It's not that just because people are investing outside, the economy does not grow.
Yeah.
It's not flight of capital, right? We see it as a flight of capital, which is not necessarily true. It's just making investment decisions. Some investment decisions are in your country, some decisions are outside the country. How can you make it more attractive and less painful for me to invest from outside in the country?
Yeah, I think you're suggesting a unified KYC is something that probably can help us. Like, Dewang, you have also worked on these things a lot, right? So from a technology perspective and also from a financial inclusion perspective, can you talk a bit about this in terms of how technology or growth would be enabled by solving for KYC?
I think if you look at from a KYC context, I don't know if you're aware of something called as CKYC. That has been used really, really well in the financial investment world right now. There have been talks of basically using CKYC even for the payments world also. So the idea is basically, again, going back to the point what Kanchan mentioned was basically about integrating the KYC, because it's very frustrating when we look at KYCs being asked at every point. Again, as I said, basically going back to my previous discussion about when you're sending money outside the country, even though there is a DPI out there, you're sending money from a KYC'd account. So you're not going to a bank branch and giving cash. It's not an exchange house, not a traditional Dubai kind of a money transfer where a laborer is going and giving cash and transferring money here. You're giving money from a KYC'd account to another KYC'd account globally. I think those whole process can be made seamless. So in that case, basically what happens is, to reduce that friction, what we'll need to probably work on is, again, something like a CKYC formats out there. Wherever there can be checks and balances to be. So I think you need to look at the low risk, high risk kind of a mindset out there. So typical risk management systems are there in place right now. And if, for example, when you look at money coming inside the country, and if you're saying all the banks use AML checks and other things out there, you have velocity checks on the accounts and everything else. In such cases, basically, for low value payments, if within a certain particular amount of velocity, if there are checks and balances which are put around there, then money movement can become seamless and easier, without asking for too many questions out there, without asking for too many details. Because although RBI, if you look at, has made things a lot more simpler right now, including, for example, for inward, for exports. If you look at right now, last 2 years, we've seen a lot more changes happening. They've made trade as easy as possible, including retail remittances as easy as possible. So regulators are moving to the right direction in terms of ensuring that they're trying to reduce that friction as much as possible. So idea is to see, can you use risk management technologies to look at low risk and high risk kind of payments, let the money movement be there. Moment money, so it is technically for inward is easier because money is coming in, you're putting AML checks around there and basically seeing, and that ultimately the money is going to drive into the economy itself, right? Because that's where the greater capital, you want money to be invested in basically for the greater good of the society out there. So let's, for example, we are not talking about the software engineer sitting out of US, we're talking about some labor guy sitting out of, let's say, East European country. Now a lot more Indians go down to, let's say, Europe also, for unskilled labor. We are not talking about skilled labor out there. So unskilled labor, they're transferring a lot of money out into the country out there. So using this, either CKYC and the technologies that can be adopted here as AML and other checks can be automated out there. I think a lot more can be driven through. And of course, linking that with maybe, like yesterday I was talking to somebody who's a PPI operator that said basically, is there a way of getting money, because I'm a regulated PPI, I have a UPI handle and everything else. Is it possible for me getting money from outside and getting the money loaded directly onto the PPI without me having to tie up with maybe any other direct B2B tie up with another exchange house globally? So idea is to create interoperable networks around there, and that's what is going to drive a lot more financial inclusion.
Amazing. I think that's financial inclusion driven by policy change and partnerships and KYC standardization. So these are the elements that I can take out from your conversation that would be the key. And of course, like I mean, all of us would like really want to thank the regulator to also making it easy for us. I think the AD2 or AD1 regulations on partnerships that's more clear. We would have more partnership-enabled fintech developments on the remittances side and also on the trade side, like the recent regulations which lets you like knock off the export collections without getting into the invoice declaration. So I think those are the positive thing that has come up. Like talking about a bit on the the partnerships and multiple models that are building up, right? So I mean, as wise as we have been doing this model for a while, but we see that I mean, models like RDA has benefited the ecosystem a lot. It has lowered down prices substantially, but I mean, there are still restrictions in terms of how they are. I'm sure like regulators are like evolving over a period of time. So and similarly, technologies like blockchain and the digital e-money is also coming up, which is the CBDCs. So how do you see, I mean, this is a question for Dewang and for Krishna also, like, if you can walk us through in terms of how do you see models coexisting, or is there a winner takes all game over the period of time in terms of the models that you operate?
Fundamentally, when you look at technology is, I think, more democratizing access everywhere. It's not a winner takes all kind of a thing. Because ultimately, it's earlier when you had, now everybody's creating interoperable technologies. Monolithic world is gone now. Everybody, like for example, you've seen experiments happening globally, like Nexus, for example, through BIS. They're trying to create an interoperable network for basically money transfer and money movement globally out there. They're saying we would be able to carry transactions. Settlements can be bilateral between basically the regulators out. I think that's where the second settlement is always the second side of the whole thing. Just like what Nexus is trying to do, when you look at any digital movement or like CBDCs, and one of the biggest things which use cases of CBDCs I would say is not within the country but outside the country. Pre-UPI, when CBDC was actually conceptualized in 2013-14, that was a time when it had implemented it. It would have been a lot ahead of its time and they would have replaced. I don't think we would have seen UPI right now. But given the current context, CBDCs can make a mega shift in trade behavior, especially on trade life cycles between, basically when you look at payments between low value payments, including high value payments, you can probably do that. I think that's where you can remove and reduce a lot more friction in terms of the overall movement. And at the same time, you can create a non-repudiation kind of a thing. When you say repudiation, it's, I think you're talking about somebody going and tampering the documents and everything around there. And I think we've seen that time and again. And so there are cases where even when we've seen, like for example, when outbound money transfer, students, when they transfer the money outside the country, they have been tampering with their documents and send out. So I think those controls are absolutely important place. And in trade also, for example, when you look at trade, shipping bills are being transferred, bill of lading is being transferred, people tamper with the things. So if you can use blockchain and other technologies to ensure that you're creating a non-repudiated network, an interoperable network, that will work really, really well for the remittance world. And I think that's the shape of things to come and shape of things to happen right now. So rather than, like, for example, I probably would, even though you have licenses everywhere and put capital everywhere, you don't need to block your capital in every country out there. The idea is, we had tried a similar model in my earlier company for some other date, not for basically technically for money transfer, but we're using that for basically helping people buy and sell gold in the country. So that was part of my earliest venture, which I was trying to build up. But we said that was not an efficient case of money because you're blocking your money and you're blocking your capital out there. If that can be removed and basically money movement can be frictionless everywhere, and of course, the settlements can be done. You are basically, of course, you are a licensed player. If you're licensed everywhere, settlements can be easily managed out there. So that's what I feel we can take it up.
Sure, thank you. Krishna?
So once you solve for the KYC digital identity part, it's all about interoperability. How do you connect domestic rails to global rails. And also in terms of, as he was rightly covering, so yes, I think covered most of the aspects there. Question is about interoperability. That's what I look at. Even when you look at CBDC and all these things, it's about interoperability and settlements. So idea is what? How to remit fast. And these are why we interconnect all these systems together so that the remittance is fast, it's frictionless, and it's cost effective. So that sums it up for me.
Sure, thank you. We are nearly around the time. Hi, yeah, we are nearly out of time, but I have one line of questions for you guys. So what do you think is going to be the biggest lever that India needs to pull to ensure that we are able to, like, from your words, like move from 125 to say 300 billion in next 5 years? So what would be maybe top 2 things that comes to your mind? Yeah.
So obviously we have done a lot of work in terms of removing friction on payment rails front, right? The second part obviously is the treasury settlement part, the work being done around regulations and framework on, the tokenization and blockchain. Hopefully that reduces the friction on the treasury and locking of the capital front, right? But I guess if we have to really take a leap forward from here and not just think about incremental movement, then we have to think about portable identity, portable KYC, at least in trusted corridors, right? If you trust, for example, if you go to US and you have a real ID, that real ID is literally a one piece of driver's license which you can carry anywhere, and that's verified, security check done, everything is done. If there was a way for me to link that to your identity here in India, and a single identity could carry all across, maybe valid for a period of time, that's going to be a massive unlock in terms of how the money will flow into India. It does not have to be global from day one. You can just pick and choose top 3 corridors, which you trust, that, the systems and governance there is largely tamper-proof. I think that is going to unlock a massive value for India.
Sure, thank you. Dewang?
My sense, I think, I'm just not going to repeat what Kanchan said, but I would, if you ask me for my personal ask, I would look at things like auto sweep and sweep out kind of a thing, especially when you're trying to drive investments, both inward and outward both. Because for example, when you look at a case of, let's say, somebody investing in stocks outside the country. Now, every time you do a money transfer, you go through the same KYC process, and unless, of course, you're driving through a bank, you still, because you're a KYC, banks allows you to do things up to a certain particular limit, but they still ask you for KYCs and other things. The idea is to see if you can move those rails and make sure that basically your money movement is seamless. That helps a lot. What we need to do, India needs to do work on basically is emulating the domestic payments example and see how can we replicate that globally. We're trying to see that with UPI International and a whole lot of things happening around there. But I think still there is some time to look at that. So if we can replicate this example today, for example, one of the best things when you look at domestic payments, you don't need to bother about anything. You're just picking up the phone and making a payment. Can the payment be as seamless, as easy as that? Right. So that's what basically we need to head towards, and that's what I wish basically we could get towards even for international payments. We've seen a lot more people preferring to use cards versus basically your remittance rails, because they say cards are frictionless versus basically remittance rails. So I think we need to get to that, because then that's not really solving the problem, because you're asking people to move to cards and they're not using remittance rails, and effectively they're trying to do the same thing, moving the money around. So that's what I would say.
Yeah, I would say 3 words: interoperability, one digital identity, and programmable compliance. These 3 factors. Thanks.
Thank you. I think this is well summed up from you, right? Technology and interoperability and the compliance. I think compliance is close to my heart. So of course, solving for compliance is something that would benefit us. And for me, the point is that, ease of policy balancing with the growth in the ecosystem. I think regulator has been an enabler, and as industry participants, I see more collaboration is going to bring us to the growth of next level in this space. Yeah. With this, I would like to really thank my panelists here, and see, I think remittances is not only like numbers, but it is bringing families together. It solves. There's a human behind the remittances, and it's add value to their life and their investments, and so it's a bigger picture thing, right, beyond the technology that all of us are building and trying to solve for. I'd like to end this session with that, and we have time for a couple of questions. Yeah. 2 minutes we have, so we can take any questions if we have from this. No, we're good then. I think it's too technical.
Thank you.
Thank you. Thank you.
Thank you so much.
Can I please request our panelists for a group photo? Ladies and gentlemen, can we please put our hands together for our esteemed panel? Thank you so much for sharing your invaluable insights with us here at the Global Fintech Fest 2025. We truly appreciate your presence here. Thank you.